Hey, Walter here. I want to talk about an interesting thing that happens in the markets, and you can actually use this to your advantage. Now, you may or may not have heard of a guy by the name of Todd Marinovich. Now, reportedly, Todd Marinovich's father wanted him to become an NFL quarterback, so to play gridiron. And so what he did is he set up his life. So he had all these coaches, this diet plan. I don't think he ever tasted sugar. On his 12th birthday, he only had to run 6 miles instead of 9, and so forth. And basically, he created the so-called perfect quarterback to play college and eventually pro sports. And his son did do that. But here's what's interesting. Now, again, this is just from my understanding. I don't really know exactly what happened here, but reportedly he ended up going, when he went to university at University of Southern California, he ended up falling into drugs and ran into addiction problems, apparently. And what's interesting about this is that he had to kind of snap back. So he had all this structure in his life where he didn't taste sugar. He was completely focused on becoming a professional athlete. And then as soon as he had a little bit of freedom and his father wasn't around, he actually went off the deep end. And it's funny, if he had just taken the middle path and allowed his son to taste sugar and didn't have to run every day and all that stuff, you can imagine where he might have had a different result. And with trading, oftentimes what we'll see these massive candles go. If you want to learn more, before I forget, if you want to learn more about how you can grow a small account quickly, like we're going to try and do in this course at Big Profits course, you can go to Big Profits course or click the link below this video. But basically, that's what we're doing. We're taking a little $1,000 account and growing it over 300 trades to 100K. And we're using risk management, psychology to deal with the drawdowns that are inevitable in terms of this strategy and all that. But what's interesting about Marinovich is that, if he had a different upbringing, he probably would have had a different result. I don't think he lasted very long in the pros as a player, and people kind of chalk that up to his apparent drug use. And so this candle right here on the Euro Kiwi, this is an example of a market that looks pretty bearish, right? This is the 2-day chart, and this candle is going to close in 490 minutes there. But what's interesting is if it closes really bearish like this, what we'll probably see is some sort of a pullback, and that pullback may go all the way up to this level up here. Just like Marinovich had his pullback, he was on the straight and narrow until he had a little bit of freedom, and then he went the other way. And the markets tend to do that. There's these high tide and low tide effects, and you can use them to your advantage. So one that we know, for example, it comes up a lot, is that the Mondays and Fridays tend to be days where the markets, not always, but sometimes will move against the overall move for the week. So if Monday goes up, you might see the week go down. Or if Friday goes down, it probably made the wick for the weekly candle, and that most of the week was up. So you can use these rhythms. The other one is the Asian market. The Asian market, what you'll often notice is that the Asian market will make some really, kind of interesting moves in one direction, and it'll completely reverse in later on in the day. So let's take, for example, right here. So we can see this is Thursday, Wednesday. Thursday is today, Wednesday, Tuesday, Monday. Okay, so here we go. So Monday, what did the market do? The market opened right here, right? It opens right here on Monday for the week, and it closed up slightly. Closed right here. Okay? So it was up a little bit on the the Euro Kiwi. You're looking at the 1 hour chart, and these are the days demarcated by these lines. So then what does it do? It actually makes the high of the week so far was made on not Tuesday, but Wednesday, right? And now from Wednesday's high to the current low, which we've made the low of the week just in the last candle there, it's gone down 235 pips. So it's gone 235 pips from high to low for the week, and yet the Monday candle was actually slightly up. It was up by about 18 pips. So if this holds, what we would expect to happen is perhaps the market goes lower today and tomorrow, but at the end of Friday, typically you'll see a move kind of against the move of the week. So it'll probably go up a bit at the end of Friday, maybe the last 3 hours of Friday or something like that. See if you can notice these patterns. See if you can use them to your advantage to get into trades, because I think you can. And I think it's very useful to wait and be a little bit patient, just waiting for the tide to kick in so that you get the better entry. I hope this helps. I wish you happy trading. If you'd like to join us, you can learn more about the Small Accounts Big Profits course by going to bigprofitscourse.com. See you in the next video.